Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 19th of September. All right, now, if you have a look at yesterday's Daily Market Insight, I was saying very clearly that the dollar, in my eyes, has gone as far as it possibly can, right? Fully factoring in the positive dollar side and actually weakness in euro, sterling, Aussie, Kiwi. It's all factored in. The dollar kicked again, and I think that's exaggerated, right? And this is what I was sort of talking about yesterday. It's not just this gut feel. It's just like an experience, from experience, I should say, where this has popped up and you're like, this can't keep going up, right? Because there's nothing to fuel it. And if anything, it was a bit of a short squeeze there. So we have seen the dollar hasn't really drifted back, but it's stalling, right? And this is what you get when we do see, big clear moves in one instrument against the others. It just doesn't go up and down in a straight line. What we need now is an injection of fresh momentum. Where's that going to come from? Well, the fundamental releases, and that's why we are focusing on those data releases. Like at the moment, still euro down, sterling down, Aussie now drifting sideways. Looks like it's found fair value. We have got the RBA minutes coming out in about 40 minutes. Kiwi also trading sideways with the Aussie, but you know what? Starting to look like it's ready to sort of come back a bit. And that's what how euro looks at the moment. Sterling, not so much. And dollar yen, well, we're sort of on dollar yen watch, so to speak, as the BOJ is coming up on Friday. Usually, in my experience, they intervene when you least expect it, not at the meetings. I mean, by all means, the meeting is a good focal point. But if you want to get bang for your buck, you intervene at an erratic time. But as I said, if the strong dollar fundamentals are in play, the BOJ is selling into a strong market, they're just going to get hammered. Now, what are we looking at today? This is where you need to focus. And if you're not focusing on dollar CAD, well, you're sadly mistaken, probably wasting your time, because there's some magic here. Now, let me connect the dots, right? You need to pay a bit of attention. So let me just change the clock back here to UK time, right? So you can actually sort of get into the swing of things here. Now, let's have a look here. So inflation rate, right? It's a key number across all the central banks at the moment. Now, the year on year got down to 3.3%. They are expecting a number to bounce back to 3.8%. Does that mean we go and sell dollars, buy CAD, or buy CAD against all the crosses? Not really, right? The devil is in the detail. Now, if you connect the dots and you know where to look, right? I've got the Bank of Canada website here looking at their previous statement, which came out on the 6th of September. Okay, not long over, almost 2 weeks ago. Now, the key part is here, right? You're looking at the economy. They will tell you exactly what they're looking at. After easing to 2.8, it moved up to 3.3, right? So they're just telling you exactly what's happening here. But with the recent increase in gasoline prices, inflation is expected to be higher in the near term before easing again. Right now, this is the important part. So a high number here, 3.8. Well, that's expected, right? I think what we're going to do, they are saying if inflation is a little bit out of the unusual, they will do something about it. So when it comes down to looking at the numbers, right, we are looking at these two main numbers here. Right now, 3.3 was the previous number. They are expecting 3.8. Now, for me to get excited and to buy CAD, I'm looking for a number up around that 4% mark or above, right? Now, I'll show you oil in a second. Oil has just continued on this run, from the 70s up above. It's around $92 at the moment. And that could have a huge impact, right? For Canada, oil is their gravy train. And it also is obviously a massive part of the inflation picture for all economies, right? This increase in oil prices is like an interest rate hike, right? Because it's taking cash out of your wallet just because of the increase in prices. So you're going to be keeping an eye on this very closely. To me, the way oil is trading, the best trade here is a strong inflation number, because that means you would be buying CAD on the expectations of the central bank having to raise interest rates. It goes with the oil move, and that's where all the momentum is. All right, now let me just explain this on the charts, because there's a little bit to it. Now, if I just come over to my CAD template, now let's just have a look at a dollar CAD, right? Let me just get the right pen on here. Okay, so we're moving down. And you can see very closely, if I just get the green one up, how closely, like the oil price, I've got it inverted here. So as it goes down, it's increasing in price. How closely dollar CAD is following this, right? Longer term, well, yeah, it's pretty much there as well. You can see how it's correlating down with the recent move. But looking at the short-term stuff, you can see the impact oil has on the CAD, right? Now, if we have a look at the crosses, it's even more prevalent, right? Looking at Aussie CAD, right? Oil price is moving down with it. Let me just change that pen color so I can make it a little bit brighter. Okay, so we've got, Aussie CAD going down. Look at Euro CAD, right? Going down there as well. Goes with the Euro fundamentals as well, which are lower. Stronger CAD, Sterling CAD goes with the UK fundamentals plus the stronger oil. CAD Swiss, the opposite of Euro CAD. CAD Yen, right? Charging. Also Kiwi CAD, right? Oil is in the driving seat here, right? So strong Canadian inflation numbers, you're buying CAD, going with the trend, right? So that's, to me, is the trade. And I'm sort of looking more, as I said, to get really hyper excited, I'm looking for a number sort of up towards 4%, above 4%, you would be sort of jumping into these trades. Now, the key thing is here, when you look at these trades on the crosses, right, they're already heading lower. So what do? Well, you're looking to get into the trade live, or like CAD Yen, you'd be buying, right? Buying CAD Swiss, selling Sterling CAD, selling Euro CAD. Now, as I said, you'd be looking to get into the market probably 15 points from where the market level is before the release. If it's 4% or above, the Bank of Canada are going to have to raise rates, and that's stronger for the CAD, goes with the oil move, right? It's pretty simple. The other strategy you can do, and this is more of a, maybe not today, but you should be keeping an eye on this, right? So on these CAD crosses, you can see how dominant the CAD price is, right? And it's driving all these things down. Well, instead of just charting, which I've got trend lines here on the major instruments, you can actually just chart oil. And when this thing falls, right, if oil starts to fall, which means it starts to move back up this way, that's the light green bars. And for CAD Yen and CAD Swiss, it'll be down, right? Instead of waiting for it to break the actual instrument trend lines, you can just actually start to chart it, right? And what I'm talking about is on the hourly charts, right? If it breaks down through this level, I would, as soon as it breaks, oil breaks the trend line, I would go and buy Euro CAD, Sterling CAD, Aussie CAD, Kiwi CAD. I would sell CAD Yen, CAD Swiss, and that's what you do, because this is the driver, right? This is the momentum kicker. And if anything, I would start to draw in here, even though it's only got 2 touches. I'll just change that to orange so I don't get too excited about a premature support trend line. That's the start of a new trend line there. Like, that's got to be the play. But when you think longer term, and this is where if oil today does start to move higher, and you can see this daily chart and the same on the weeklies, if oil starts to break above the current levels, well, I'll tell you what, it's blue skies up towards definitely $100, right? And if it goes up, that's going to drive, people are going to buy CAD and drive all the dollar CAD down, and the crosses against the CAD down as well, right? So that's one thing. We get really strong CPI today, and we see oil take to the top side. So looking at this hourly chart on, hang on, let me just get this up. See if I can just get in that top resistance line. Okay, I'm going to have to, well, it's on the hourlies. That's how far back it goes. If it breaks this resistance line around 92.70, right, on the top side, well, I tell you what, if we get a strong CAD CPI number there, it's an easy trade. You'd be buying CAD. Well, let me just get on the hourlies there. You'd be buying CAD across the board, and that means selling Aussie CAD, Euro CAD, Sterling CAD, buying CAD Swiss, buying CAD Yen, and Kiwi CAD. Now, as I go through that, I wouldn't be doing this against all the instruments. What I would find is the instrument that has the best technical setup, right, to go with it, or the one you're most comfortable with. Euro CAD here, out of all the CAD crosses, has probably got the most liquidity. CAD yen, well, you're dancing with the devil there with the BOJ, but I'll tell you what, I can't see them doing anything today. That should continue higher. So to me, on the face of it, if I just clear that, Euro CAD and CAD Swiss, right? They're just the opposite of each other. Euro CAD goes with the fundamentals, the Euro fundamentals down, and CAD Swiss will do the, it's like trading Euro CAD except the opposite, right? You're just buying it instead of selling it. They're two of the easiest ones. Sterling CAD has got massive downside potential. So once again, if we get strong Canadian inflation numbers, that's worth a crack there as well. Now, if I looked at the opportunities here, man, there is a chance. That's the expectation, right? So maybe we get a 3.5%. Well, yeah, you can see you'd be buying dollars, selling CAD, but you know what? It's going against the oil move. What I'm looking for here on this release is the inflation number to be high because it goes with the oil trade, and that's where the easiest momentum is. We don't have exactly gorgeous technical entry levels, but I'll tell you what, we do have trends in play, and that's what you want to try and utilize. Get into the market, as I said, maybe 15 points below the market after the release, or just trade live. So I'm looking for opportunities to get short Euro CAD, Sterling CAD, maybe not so much Aussie CAD, because when I look at the overall majors, those couple of pairs are sort of stalling, coming back a little bit. But that's all I'm trying to do is connect the dots, follow the data, right? You've got these numbers coming out. Let's take advantage of them. We know exactly what the Bank of Canada are thinking. They're expecting a high number, right? But they're probably not expecting anything over 4%. That would be a shock. But I tell you what, that move in oil, it is a shock, right? That's a hell of a move. And that's going to create a huge amount of inflationary pressures across all economies, not just Canada. Okay, so factor that in. It's the best opportunity today. If you know where to follow the markets, you can actually come back and piece together the best potential trading opportunity, right? And with that, after the release, I'll be focusing on the CAD strength. CAD is going up against everything at the moment, and that's because oil is driving this bus big time, right? So don't get overcomplicated. Look for the number that goes with the oil strength. That is strong inflation numbers, and you're going to see CAD continue to rally across the board. All right. That's my tip for today, guys. There's plenty more coming up during the week, but focus on that. It'll keep you out of trouble. All right, guys. Have a good one. All the best. Cheerio.